Hey everyone, and welcome to The Explainer. I am so thrilled you're here today. We are breaking down a really fascinating story of scale, strategy, and pure adaptation in the world of global agriculture. We're looking at the Q2 2026 earnings of agribusiness giant Bunge. Now, if you've been keeping an eye on the markets, you know that shifting global trade flows, fluctuating commodity prices, and just general geopolitical complexities have made the ag sector a pretty tough place to operate lately. But Bunge didn't just scrape by in this crazy environment. They actually capitalized on it to deliver an absolutely massive second quarter. So we're going to take a close look at how their newly expanded global footprint allowed them to navigate this complexity and what it all means for the future of food, feed, fuel, and honestly, even the prices you see at the grocery store.
Here's our game plan for today. First, we'll hit the Q2 headlines. Second, we'll be unpacking the segments. Third, we'll look at capital and cash flow. And finally, looking ahead to the full year.
All right, let's jump right into Section 1, the Q2 headlines.
Okay, let's kick things off by hitting the hero metric of the day. Bunge management was so confident in their second quarter performance that they actually went ahead and raised their full year 2026 adjusted earnings per share outlook. They bumped the range up to between $9.25 and $9.75. And you know, that kind of optimism doesn't just come out of nowhere. It's solidly backed by a really strong Q2 adjusted EPS of $2 flat compared to just $1.31 in the same quarter last year. I mean, that is a massive leap, and it immediately tells us that the core engine of this business is running incredibly hot right now.
Now, what's really interesting is how leadership frames this success. Listen to this quote from CEO Greg Heckman. He says, "Against a backdrop of geopolitical uncertainty and shifting trade flows, our expanded global platform did exactly what it was designed to do." He's basically talking about agility here. As you might remember, Bunge recently completed a huge integration with Viterra, which drastically expanded their global capabilities. What Heckman is pointing out is that when trade routes get disrupted or certain regions face issues, Bunge now has the physical scale and the geographical flexibility to just pivot, capture new opportunities, and keep delivering for their customers. It's a platform built specifically for this kind of turbulent era.
So, how exactly did they pull this off? Let's break it down. In Section 2, unpacking the segments. We really have to connect these financial figures to the physical commodities moving around the globe. And the absolute powerhouse of Bunge's portfolio is for sure their soybean processing and refining segment. Just look at this performance. It delivered a staggering $445 million in adjusted segment EBIT. That's essentially their core operational profit for the quarter, and it's up from $304 million a year prior. That is just incredible growth. This is the true heart of Bunge's business, right? Taking raw soybeans and turning them into the essential oils and meals that literally power global food and feed chains.
And the sheer scale of the volume increases here is honestly breathtaking. Soybeans processed jumped from 9.3 million to over 11.5 million metric tons in Q2. Just to put that into perspective for a second, that is roughly the weight of over 30 Empire State Buildings. Soft seeds processed, so things like canola and rapeseed, nearly doubled to almost 3.5 million metric tons. Meanwhile, grain merchandising just exploded from 8.3 million to nearly 23.9 million metric tons. This is the direct physical proof of what happens when you dramatically expand your origination footprint and production capacity. The combined company is just moving so much more physical product than it was even a year ago. And this brilliantly illustrates the shock absorber effect of Bunge's new global footprint. In the earnings report, management actually noted that processing results dipped in Europe. Now, if you're a smaller regional company, that could be a disastrous quarter. But for Bunge, it was more than offset by incredibly strong performances in Argentina, Brazil, and North America. When one region falters, their operations in another region easily pick up the slack. They've diversified their geographical risks so well that they can ensure steady profitability completely regardless of localized issues. Which brings us to their grain merchandising and milling segment. With an adjusted segment EBIT of $67 million, which, by the way, is more than double the previous year, this segment perfectly showcases their ability to navigate those shifting global trade flows we talked about earlier. Their vastly expanded grain handling capabilities allowed them to excel in areas like ocean freight and commercial services. So they aren't just processing commodities anymore, they are mastering the complex logistics of getting those commodities across oceans precisely when and where they're needed most.
But managing all that cash is what ensures long-term success. Let's look at Section 3, capital and cash flow. So the crucial point here is this massive number, $2 billion. During the quarter, Bunge repurchased approximately $250 million of their own shares. Why does that matter so much? because it marks the successful completion of a $2 billion share repurchase program that was directly related to the Viterra transaction. They promised the market they would return value to shareholders while completing this massive integration, and they totally delivered on that promise, down to the last dollar.
But buybacks are really just one piece of the puzzle. Bunge operates with a highly disciplined strategy for allocating the cash they generate. Their priorities are really balanced mix. They're committed to sustaining shareholder dividends, which rewards investors right now, but equally important are their reinvestment opportunities, putting cash into sustaining their infrastructure and funding growth CapEx to make sure their facilities remain state-of-the-art. Finally, they use cash for strategic portfolio actions to really refine their business focus. It is pretty much a textbook balanced approach to corporate finance.
Let's look at how effectively they're using that capital to generate returns. If we look at Bunge's cash return on equity trend over the last few years, we do see a gradual cooling off from 2022's historic highs. But notice the distinct uptick for the trailing 12 months ending Q2 2026. It rose to 10.8%, up from 9.4% in 2025. This tells us that as market conditions are starting to improve, and as their synergies from the Viterra acquisition really take hold, Bunge is becoming increasingly efficient at turning shareholder equity into hard, discretionary cash.
We've seen a stellar Q2, but where is all this heading? Welcome to Section 4, Looking Ahead.
Remember that hero metric from the very beginning that raised full-year EPS guidance? Well, this is exactly where that confidence comes from. Bunge broke down their specific segment outlooks for the rest of 2026. They're projecting soybean processing results to be higher than previously expected and soft seed processing to be slightly higher. Now, while they do expect grain merchandising to be lower, the sheer weight and profitability of their core oilseed processing segments give them a broadly optimistic view of the year. They see strong underlying margins, and frankly, they are perfectly positioned to capture them.
Which brings us to our final thought for today. We've seen how Bunge used its expanded footprint to absorb regional shocks and capitalize on processing margins in a truly phenomenal Q2. But the world of agriculture, it literally never stands still. As global trade flows continue to shift and the demands for food, feed, and sustainable fuel keep evolving, how will Bunge's newly expanded footprint capture the next wave of agribusiness opportunities? And maybe more importantly, as the climate and geopolitics remain so unpredictable, is this massive, interconnected platform the new blueprint for securing the globe's food supply? Thank you so much for hanging out with me on this explainer. Keep learning, and I'll see you next time.